Ross Gerber es presidente y CEO de Gerber Kawasaki Wealth and Investment Management. Ross, thank you so much for your time and for giving this interview to Negocios Televisión. Thank you.
My pleasure. Thank you.
Ross, how do you see the current situation of the stock markets?
Well, the current situation is right now we're in a correction because the U.S. government is kind of messing around with a lot of different things with the different bills that don't seem to be able to be passed and the debt ceiling. So it's creating a lot of nervousness along with higher inflation and supply chain bottlenecks. But overall, the U.S. economy is as strong as I've seen it in my life. And so we're very, very bullish on the future, but there are many short-term obstacles to meeting demand right now, which is creating a lot of strain on the economy.
Recently, Ross, everyone is worried about technology, although, for example, NASDAQ is only down 1.5% in the last 30 days. Do you think this negative sentiment will last long in the market?
No, I don't, because I think the Democrats will get their act together by the end of the month and pass the bills that need to be passed and get the debt ceiling taken care of. And then we have earnings from tech companies coming out in the next couple of weeks, and we expect record numbers, continued incredibly strong growth in the tech sector. So we see the tech sector is actually the strongest sector as far as earnings because they have the least issues with regard to supply chain bottlenecks.
Where does Bitcoin stand in all of this? Is it time for further rises? How far in this case? For example, some investors like Casey Wood believe it will eventually be worth $500,000. Do you agree with Wood?
Well, I don't like to assign price targets to something as speculative as Bitcoin. Its price is going to be based off supply and demand. And we're one of the only institutions in America that offers Bitcoins to client, and we're seeing unbelievable demand. So what we see happening is globally Bitcoin becoming a sort of global monetary system with Ethereum and other cryptocurrencies. And this is a great opportunity for investors to get in now. We know the price will be higher over time. We don't know how much, but we suspect as institutions and individuals allocate more to Bitcoin that the price will rise and at least double probably in the next couple of years. Of course, there's just tremendous amounts of risk and volatility with Bitcoin, but the opportunity is enormous.
So you see Bitcoin more or less on $100,000 right now?
Yeah, that's the next stop. So we think Bitcoin hits 100,000 as soon as we see ETFs or other vehicles created to make it easier for institutional investors and regular investors to buy Bitcoin. It's still pretty hard to buy Bitcoin for the average person. It's very confusing, and so many people are not involved. And that's why we have so much demand at my firm, because we're helping people open Bitcoin accounts.
Inflation is another one of these hot topics, Ross, in the markets right now. We are seeing bonds going higher. Are you worried about inflation? Do you think there could be a path to stagflation in regions such as Europe, for example?
Europe has a different set of economic variables that are much more complex and in my mind, disturbing than the United States because of the EU. But I think inflation is a real thing on the short term because we have more dollars chasing the same amount of goods, and it's a substantially more amount of dollars chasing these goods. So that's what inflation is. So what we really need is demand to moderate. It's all about demand, and part of that demand is being stoked by the U.S. government giving money away to individuals, as it's been doing for quite some time to support the economy. As the stimulus pares back, which is already starting, we expect demand to weaken measurably because a lot of this spending is just people, having a couple extra bucks and they're spending it. So we're bullish actually on the U.S. economy and inflation going into 2022 because we see a lot of factors, including higher taxes, slowing down the economy in 2022. But this is just a reopening thing where the economy's open here in LA and it is so busy and there's so much demand for everything, and that will wane over time. But it's, we've been locked up for quite some time, so people are ready to party and spend money.
With inflation on the table, Ross, one of the questions is if the market will overreact when central banks like the Federal Reserve or the ECB start tapering, or is it already priced in, this possibility?
Well, I think the Fed's been very transparent about what they're going to do, which is, we're going to see tapering probably start at the end of this year, going into next year, and then maybe higher rates in the end of next year, at the beginning. So we've got a long time before the Fed even raises a rate. But it is a real risk to the markets down the line when rates start to move higher, because this is the thing that will create a pressure on the current valuation of all assets, including real estate and the stock market. So we'll see probably some difficult times on the short term when rates go up, and that will probably be in about a year or two. So we're very bullish on the short term right now, and until the Fed actually starts raising rates, we're not that concerned. So we'll see volatility, but I think there's a lot more upside still to come.
Energy is another subject that is worrying the market right now. Do you think we may be on the verge of an energy crisis right now, taking into account what is happening in China and the rising electricity prices here in Europe?
Well, I think the energy crisis is being created by the Saudis and the Russians, who have been, looking to make extra money off their oil for quite some time. And OPEC is holding back production. Well, they clearly have the production to meet demand, and they just don't want to pump it because this is their chance to gouge consumers globally, and Europe is taking the brunt of it. Now, I'm an EV investor, and in my fund GK, we invest in climate solutions. So the simplest solution for somebody who doesn't want to pay high energy prices is to get rid of their gas car and buy an electric vehicle. This will cut your costs tremendously. So while the Saudis and the Russians are being greedy right now, what they're really doing is feeding the frenzy to EV and alternative energies, which will hasten their ultimate decline. So, we're fine with high energy prices because it's destroying the environment. We just had a horrible oil spill here in California. It's time that the globe gets off oil, and this is going to help do it.
Ross, speaking of China, do you think the situation created by Evergrande is already amortized?
No, this is the biggest risk out there that I think people are talking about, but they're so worried about inflation and they're so worried about rates and things that aren't going to happen on the short term. While China, I think, is kind of in a pickle right now. Like, they're seeing tremendous pressure on the property side and the debt side. Now, the upside of this is that the Chinese, debts are mostly owned by China, and so the effect in the rest of the world will be minimal compared to internally in China. But China could be on the verge of its first recession in modern history, and Xi's desire to control the economy and control so many things is also putting the economy at risk and isolating China from global trade, which is preventing big companies from making investment in China, and they're looking at alternatives like Indonesia and Vietnam. So China has made some serious missteps. They're under financial pressure, and there's a large chance we could see some sort of extreme economic event in China. But more likely than not, the government's going to have to step in, print money, and support the real estate market, and that's what I suspect they'll do.
Ross Gerber, President and CEO of Gerber Kawasaki Wealth and Investment Management, thank you so much for your time and for giving this interview to Negocios Televisión.
Thank you. Thanks for having me.